Hello again, everyone. Welcome to this episode of Cotton Grower Magazine's Cotton Companion podcast. This week, USDA told us that 6% of the 2023 U.S. cotton crop has already been planted. Now, that's primarily in Arizona and the southern parts of Texas, and it's a good start, but it also signals the ramp up to cotton planting across the rest of the cotton belt. And we know growers are kind of chomping at the bit right now, trying to finish up corn planting in most areas and watching those soil temperatures pretty closely. I'm Jim Stedman, editor of Cotton Grower, and with me is my colleague and co-host Beck Barnes. Now, Beck, just looking at our upcoming weather forecast, I'm finally optimistic that spring is finally here, and that's especially following a couple weeks with some pretty scary storms across several of our southern states.
Yeah. Well, you're not lying. There was I think it was just about a week and a half there at the end of March where we had terrible tornadoes down in the Mississippi Delta, down there in Rolling Fork, Jim, which, as you know, that's not terribly far at all from my hometown of Leland. And so, yeah, I mean, I was keenly aware of the folks that were impacted down there. And then about a week later, we had a rash of storms really kind of moved in tornado-wise. I mean, I think they started spinning them off in East Texas, and one of them hit Little Rock, and others in the Arkansas Delta across a lot of our cotton towns. And so, yeah, it's been a hellacious little mid-spring or pre-spring, if you want to call it that. So, yeah, certainly our thoughts and prayers are with everybody who was impacted by that. And mercifully, yes, as I look out my window, it's a sunny 70 degrees here in Memphis, and it feels like spring is well and truly here. My nose is running, my eyes are irritable. So yeah, it's happening.
Yes, it's definitely happening. Now, if I could just get the lower part of my yard to dry out here, maybe by next week.
Yeah,
maybe. Anyway, well, since our last visit, cotton market watchers have been paying close attention to several indicators that could impact this year's cotton crop, and that includes the USDA Planting Intentions Report that was released on March 31st, turbulent cotton prices, continuing weather issues, and other economic indicators regarding inflation rates. So it's a lot to try to keep track of. So to help us out, our good friend Dr. O.A. Cleveland is going to join us in just a few minutes to try to help unpack all of this for us, try to make some sense of it, and look for some possible near-term marketing opportunities. And as always, I'm sure it's going to be an interesting discussion. So as the calendar turned to April, Cotton Grower's Crop Scan Ag Report has returned to cottongrower.com. And that's providing biweekly field-level reports from 5 crop consultants based in North Carolina, South Georgia, Mississippi, Central Texas, and West Texas. Now, in our first edition, report says growers are focused on getting their pre-cotton preliminaries like burn down, final field prep, and corn planting wrapped up in anticipation of cotton planting beginning soon. With wet weather has also been a concern everywhere but West Texas, which still needs some moisture prior to planting. Reports are pretty simple right now as we're all waiting for planting to get started, and we're going to be sharing information from these reports in our Cotton Companion episodes as we move through the summer. But for the full reports, please go to cottongrower.com and look for the Crop Scan Ag Report segments. Well, now, as I mentioned earlier, there are a lot of cotton market factors and issues to unpack right now as planting in most areas is just weeks away from beginning. To help us sort through these items, we're happy to welcome Dr. O.A. Cleveland, Professor Emeritus of Agricultural Economics at Mississippi State University, back to the Cotton Companion. O.A., thanks for joining us today. Hope you're doing well.
My pleasure. It's always my pleasure to join you. Thanks.
Yeah, O.A., I second Jim's sentiment there, man. We're happy to have you back here. And I wanted to just jump right in. We saw a couple weeks ago now, USDA released their Planting Intentions Report back on March 31, and they projected 11.3 million acres of cotton will be planted in 2023. So that falls pretty much in the same range as what we at Cotton Grower Magazine projected and what the National Cotton Council had projected a little earlier in the year. But considering the timing and other market factors that have happened since our projection came out in January. Were you a little bit surprised at that number, OA?
Well, I still was surprised. Yes, I'd first say all hail to cotton grower for the number y'all came out with. Few of us believed it at the time. It just did not seem to make sense to us. But we know that it was intentions that you picked up from growers, and lo and behold, they just kept coming, and it proved you to be very correct. But there was still some doubting Thomas in me. I just did not think the economics were such the growers would plant that. And of course, a lot of that is based on having some weather in Texas. That's where we can plant. But yes, but I think that's definitely, I think those intentions do come to fruition now.
Yeah, I know you mentioned Texas there, OA, and I know, like me, you are from Mississippi, and so my contacts are specifically down there in the Delta. And yeah, it wasn't long ago that, I mean, several weeks ago when the market kind of started doing a little dipping and roller coastering, that I heard a lot of guys down there in Mississippi saying they were going to switch out of cotton. But I guess that according to this USDA projection, that maybe didn't come to fruition. Or do you think that these acres that USDA is projecting, there are some coming out of Mississippi, but there are others being added elsewhere?
Well, I think there are some coming out of Mississippi, but there are others added. Mississippi will be down somewhat, but initial reports had it down as much as 20%. But I would think at no more than 10, maybe 11%, but 10, 11, 12%, something in that area. The Delta itself will probably be down 10 to 15%, but other places will be down more. But we're still waiting on Texas. There's no doubt about that. But we're beginning to pick up finally some good news there.
Yeah, we know. It's a fluid situation, certainly up until the planters really start going. So I mentioned a second ago, OA. Yeah, it seems like cotton prices have been on a pogo stick, to borrow a phrase from Mr. Stedman, for the past few weeks. They're being the low to mid 80s one day, and then back down into the high 70s the next, then back into the 80s and so forth. So right now, price seems to be settled in around 82, 83 cents as we speak today on April 12, the week of April 12. What factors do you think are impacting that sort of pogo stick scenario that we're seeing, and are there any opportunities for our growers to take advantage?
Well, first, what are the factors the causing that pogo stick to go up and down? First, just in a very naive comment, the market will continue to go up 100, 200, maybe 250 points, and down the same just because it can. It is a market, it is a commodity market, and it has that kind of volatility in it. And it'll do that whether there's any rhyme or reason or not. But again, the overall factor in this market is demand, or more specifically, the lack of demand. If I can divert just a moment, talk about the USDA supply demand report. For the sixth consecutive month, world trade was forecast lower in the USDA supply demand report, the April report. So that just tells us if world trade is down, then exports are problematic on a world basis. It tells us that consumption is struggling. It tells us that consumption is not as strong as we had anticipated earlier. So again, it's the demand, and that's the real factor. We're going to have to see either world trade increase or some minor increases in consumption, or even just minor, before we can say we're beginning to see some improvement in demand. So this market will go back and forth, and again, unless I'm jumping out of the realm that you want me to talk about, I would tend to say that old crop, that is the May and July futures, Unfortunately, that market's just dead in the water. It's going nowhere. Again, it can go up 200 points, 250 points, and down 250 points. I think we went up and tried 86, 87 cents, 85 to 87 cents, and then we went down and tried 77, 76 cents. The market didn't like either one of those two places, so it's come back to the 81 to 83, 83 and a half cent level. And I think that's where we stay on a general basis, old crop now I'm only speaking about. There's a little bit different story for new crop.
Oh, wait, looking at that number, and you said right around that 81, 82 cent range. There's still some opportunity there for growers who've been sitting on old crop to go ahead and make a move, correct?
I think so. Some people are saying don't make a move until the May or July hit 85 cents. I'm just not sure we will do 85 cents. Can we? Absolutely, we can. I'm prepared to unload all of it, or as absolutely as much as I possibly can at 84 cents. I think very positively and very probably we'll hit 84 cents again, but I think it's going to be short-lived and we'll slip back down lower than that. So growers do need to take advantage of that. Now we're coming up near the end of a month. Growers, based on when they put their cotton in the loan, they may be looking at extending storage for another month. I simply would not carry cotton any further. I would not throw more money into storage. I would go ahead and let my cotton go. As we warned all year that this was for several months, that this was a year that growers would end up paying storage costs. That's exactly what's happened. And again, there's nothing on the horizon. I'd love to be wrong. Hopefully I am wrong, but there's nothing on the horizon that says that we can get back up to 86, 87 cents.
Well, you mentioned the April supply demand report and the fact that, when I look at the numbers, and trust me, I'm looking at them strictly from a layman's perspective on that. I didn't see, no real changes for the U.S. market, maybe just a little bump in export forecast. But, like you mentioned, from a global perspective, there's really nothing there that sparks any kind of, incentive at this point. It doesn't look like to move ahead, particularly with and when it comes in terms of demand. Is there anything else that you could read out of those numbers we saw yesterday?
Well, I tend to pick up more bad news in those numbers than I do good news. But let me step back just a moment and look at the domestic numbers. You're correct. USDA made little to no changes in the domestic numbers. They did increase U.S. exports 200,000 bales up to 12.2 million from 12.0. And they did that on the basis of we've had some fairly good shipments the last 3 weeks. And USDA is anticipating that will continue. They will not only have to continue, but they will have to rise of 10,000, 20,000 bales a week if, in fact, we're going to make the 12 million bale estimate. But the USDA felt like they could do that, and they did. The problem that I see there is we're still seeing financial problems in Pakistan. We're seeing the earthquake problems in Turkey, and we're seeing financial problems in Bangladesh. Now, therein lies 6 of our major markets for U.S. cotton, and 3 of those are in very troubling situations. Won't get into the depth, but it's going to be difficult to maintain the exports to those countries. So we'll continue to have some, but maybe we will have that level. Additionally, as we move out of the U.S. numbers per se, well, let me stay there just one more moment. I know a lot of growers are saying, well, we're following Classing's data, and Classing's are 200 to 300,000 bales too high. Probably Classing's could come down as much as the U.S. crop could come down as much as 100,000 bales, not any more than that. So there's not any relief in the production side. As we also look at domestic consumption, unfortunately, I would tend to say USDA could by the end of the marketing year, lower domestic consumption 100 to 200,000 bales. So any change in the production numbers will be offset by domestic demand. So those exports are still problematic. We've got 4.1 million bale carry over here in the United States. That's a good number. We can live with that. It might be a tad bit high to take prices into the upper 80-cent level. But again, that's why the market is probably down around 82, 83 cents. The other numbers in the market, again, we lowered world trade, and that's always a problem. We reduced consumption. I mentioned these with respect to the United States, but we reduced world consumption on the basis of declines in Turkey, Pakistan, and Bangladesh. Again, major U.S. markets. And that tells us with lower world trade, we're just going to have less consumption. We're producing this year 116 million bales of cotton around the world. We're consuming only 106 million bales of cotton. So consequently, we've got a 6 million bale carryover, or a 6 million bale increase in world carryover specifically. So we've gotten world carryover up to 92 million bales. That's a little bit heavy. That's kind of got a little cap on the market. It makes it a little difficult for new crop. But again, with the idea that new crop can get in the ground and get up, I think the world economy will allow for some increased demand come March of 24.
I'm going to come at this from a slightly different perspective right now. And it goes back to a comment I saw earlier this week saying, this was going to be a busy week for the cotton market with the supply demand report, but also with the latest numbers coming out from the Consumer Price Index and the Producer Price Index. The Consumer Price Index number came out yesterday, and it was up 0.1%, which was about half of what I think they were anticipating. It's obviously a positive. But how closely is the cotton market watching these inflation numbers right now? And is this kind of good? Possibly see a little boost in demand out of some of this?
Well, it certainly relates to the cotton market. That 1% is month over month, not year over year. So it tells us there's still a bit more inflation in the market than the Fed would like. And the way that begins to impact the cotton market is that it tells us that we should anticipate another 25 basis point increase in the Fed rate. That says that interest rates move higher. That means typically that the strength in the U.S. dollar will be maintained. Then this long trail. As the U.S. dollar strengthens or continues to get stronger, it means that I have to have more Pakistani rupees. It means that I have to have more of my local currency in order to buy cotton. So it means U.S. cotton is going up, even though New York ICE has gone down. In my local currency, I still have to come forward with more cash to buy a bale of cotton. So the higher the interest rate, it tends to limit demand worldwide. What those numbers did not show and weren't supposed to show, inflation in Europe, just as the U.S. was some 4 or 5 months ago, inflation in Europe has hit an all-time high. Of course, they have not been keeping those records since back to about 2020, 2021, the year 2000 to 2001. So, but they're having a record high inflation. So that's only half of the demand base in the sense, if we'll look at Western Europe and the United States, certainly much more demand than that. But in the Western world, those are the two major halves. So though U.S. inflation was not up a great deal, the PPI, as you mentioned, the Producer Price Index, is a better indicator. And it last month showed that inflation was being tamed somewhat. But I think the Fed has to be a little bit more convinced, particularly given the general economic conditions around the world, i.e. Western Europe.
Okay. Well, the one thing we really haven't touched on, let's just touch on it real quick, is weather. You look across the southeast and the mid south, and man, we can't seem to catch a break between rainstorms and everything else. And there are a lot of growers out there who've been trying their best to get the corn planted, get that stuff out of the way, and it's one day in, 2 days out of the field at this point. Then you look at West Texas, and there's just still sitting out there, praying for rain. We know, La Nina is packed her bags and is moving away, and El Nino should be, El Nino should be in there anytime. But the big question is, will it get there in time for the planting season? So, what's the market doing at this point? Looking at watching weather, just sort of sitting there waiting and see what happens.
Well, the market is very keenly aware of the weather situation. Speculators are sitting on edge, wanting to get very bearish and push this market. Wanting to get very bullish and push this market higher, and that's a possibility. They are considerably short now, so if any kind of little run could push prices up a couple hundred points. But weather, boy, we opened a can of worms there as we meant to. Excuse me. I'm going to answer your question first off this way. I'm going to start back over in the Carolinas. They've been pretty wet, and they don't like the price of their cotton. There's some gins there that are looking at 35 to 55% reduction. And there's some major gin areas there. I'm afraid we're going to have a smaller planting in the southeast than I thought. Georgia's probably stable, but North Carolina, South Carolina, I think probably are going to be down more than we anticipated. And I just have to answer this because I know you're not going to ask me. Not a lot of cotton in California now, so in a sense we say, well, it doesn't matter. But the Tulare Lake bottom, with all the rain we're hearing in cotton, I had the opportunity to see that lake bottom flood in 1982, and that's got some 100,000 acres or so. I forget exactly. But it's flooding now, and I stood on the levees of the Tulare Lake bottom where we grow cotton. Then, where it was solid cotton, just about, and it looked like an ocean. Today, that will run anywhere between 5 to 30 feet deep in water. So no production out of California, maybe 50, 70,000 acres, nothing out there. But that's a major problem in that regard with respect to quality and to Pima. But I'll skip over that and come back to Texas. We've talked all along about the necessity to see rainfall, to see a crop out of Texas, to see the drought broken. Otherwise, we're looking at $1 or maybe more than $1 in December futures. They got very good rains over Easter. The South Texas crop got the $1 million rain. They needed rain. They got great coverage. We even got 1 inch to 2 inches in parts, sweetheart rains in West Texas. So the long range weather people tell us that this La Nina is being broken, that we should expect rains. That was the first time that the long range weather people's forecast has suggested it could be accurate. So I'm just betting on the long range weather people because they do have a good history, in my opinion. Consequently, we will get rains there based on that. Now, will we get the rains we need? That's very, very problematic. Of course, they could come anytime, but I'm not sure I'm betting on a full crop out of Texas, but I'm betting on the full acreage being planted. And that tells me that I have to like December futures. Whereas I threw out a number of $1 a pound a few minutes ago, I would tend to think more realistically, December is probably constrained around 90 cents because we're not going to pick up demand until March, April of a year from now. And we've got to have demand to push prices higher. So I like December, but we've got to live through some tough times, and the weather factors is the key as we move forward.
Well, one last question for you. Any final words of wisdom or advice for growers who may be still sitting on old crop at this point? Now, you mentioned, the price point, that 84 cent. Any other advice for them right now?
Well, again, I would say put down on pen and paper how much you paid for storage and what you could have sold this crop for earlier. Now, I'm not trying to say, oh yeah, you should have done it. You should have done it. You hadn't, so it doesn't matter now. You've got to look forward to it, to the making the call as you just suggested. So I would tend to think that, again, anything around 84 cents, you may want to get to 83 cents. By and large, I just simply would not want to pay any more storage cost. I wouldn't want to carry it to another month. That's just the best I can say.
All right. Well, with that, OA, we're going to thank you for taking time to join us again today. It's insightful as always. So I guess at this point, we're just going to wait for planters to roll and see what Mother Nature has in store for us.
Well, thank you very much. It's always my honor. I appreciate it, and good luck. And remember, give a gift of cotton today.
Absolutely.
Thank you, OA.
Thanks, sir.
So, all right, that's going to do it for this episode of the Cotton Companion Podcast. We want to thank, as always, our good friend, Dr. O.A. Cleveland, for sharing his perspective on current cotton market. And as always, we want to thank you, dear listener, for joining us. We hope that you have enjoyed this episode. If you do like what you've heard, please be sure, spread the word, tell your friends, tell your farming neighbors about the Cotton Companion Podcast. Here's where and how they can find us.
You can find the Cotton Companion in 3 easy ways. First, go to cottongrower.com/companion, or simply click the podcast tab at the top of the homepage. Second, subscribe to our channel on iTunes or wherever you find your podcasts these days. And 3, sign up for our weekly e-newsletter, the Cotton Grower e-News, that's delivered to your email inbox every Tuesday morning. You can do that by going to cottongrower.com/subscribe. Also, be sure to follow Cotton Grower on social media. We are at Cotton Grower Mag on Twitter, and on Facebook, you'll find us by searching for Cotton Grower Magazine.
Cotton Companion Podcast is produced twice monthly by Tyler Hatch and Kim Henderson, our talented colleagues, world headquarters for Meister Media Worldwide in lovely Willoughby, Ohio. I'm Jim Stedman, he's Beck Barnes, and we'll be back with you in 2 weeks with the next episode of the Cotton Companion.
Yeah, he works and he works and he works and he works all day. God made a farmer